Hi Al. How are you?
Hi B. Very well, thank you. Have a seat. Let's chat.
Al. I have done everything right. Yet I'm not making money.
Yes, B. After you called me this morning, I had a look at your trading history. And surely you are taking your trades all very well. Yet I see two major problems. Firstly, you seem to be waiting a trade out to take the full stop loss. Yet you do not wait to take a full take profit. It looks like you are closing your trades too early. Secondly, your money management really sucks.
Do you have advice for me to improve my money management?
Sure I do. Just check this video on money management. I'm sure it will help you a lot. So, you are all fired up. You've done your trading calls. You are ready to trade. You can get your entries right. Look at the system over here. Perfect. All the entries are 100%. Your exits, you are trailing your trade, putting your stop loss in the correct place, but yet you don't make money. You lose deal after deal, and you're starting to feel depressed. Well, unfortunately, this is a part of trading that most people ignore, yet it is the most important factor of trading, your money management and your mindset. Get these two things right and you will make money. If they're not, oh boy, I feel sorry for you. You will never make money, because they are the two single things that will make sure if your account will go up or down. Your money management is so crucial. You can take a die. Even numbers, you go long. Odd numbers, you go short. You can throw the die and trade on it. If your money management is correct, you will land up making money. If not, surely you're going to lose. That is how crucial money management is. Now, money management is one of those strange things where everybody thinks their opinion is the best or their system is the best. Well, unlike other guys, I don't think mine is the best. It's just I'm going to share with you what works for me. You must sit down and work out something that is good for you. Firstly, the very first thing that I always look at is my risk-reward ratio. In other words, for every one that I risk, I want to make at least 3 or 4 profit. So if I risk $1, I need to make at least a minimum of $3 profit, preferably 4 or more. But I go on depending on the strategy that I'm using. I have found that on some strategies a 1-to-3 ratio works better than a 1-to-4 ratio, and on other strategies again 1-to-4 or even a 1-to-5 ratio works better than a 1-to-3. So you must sit down and work out which one is the best for you. Like I said, many people have all got their own ideas. You must work out what's good for you and what works well for you on your strategy that you have worked out, which you are going to trade. The next big question, of course, is what percentage of your account should you risk on a trade? Well, that depends on the account size. The smaller the account is, that you can replenish the account should you take a couple of losses, consecutive losses, and you can replenish the amount that you have lost easily, then I would say you can risk more. But if the account grows and it becomes a big account, the bigger the account is and the more difficult it is for you to replenish your losses, then I would suggest you reduce the amount. On a big account, I would go no more than 2 or 3% maximum. On a small account, preferably about 5%, sometimes maybe 6%, depending on how small the account is. So you've got to sit down and work out which one is the best for you. We will work out, and I will show you how to calculate the percentage risk on the system on a spreadsheet that I've worked out, where I have calculated this year's trades on the FTSE. I have calculated each trade separately, risking 2% of the account, risking a standard amount of lots, and one system following the trend, moving my stop loss, trying to protect my capital, and another system where you just set and leave. You just set and forget it and leave the trade to do whatever it must do. And we will look into that a little bit later on, and then you can see which one runs the best for me. It doesn't mean it's going to be the best for you. You must sit down and work out which one is the best for you.
Hi Al. I thought that I will spice up your video.
Hi Fi, you're welcome. You can introduce the next phase.
Okay, thanks. Let's look at how does Al do his money management.
Right, I'm going to show you how I work out my risk-reward ratio using the Fibonacci's on the chart. But basically here is the calculation. You take the high minus the low. You've got the stop loss becomes the high minus the low, and that is on the specific trade. Let's go and look at this trade over here. Let me just click over here. We're talking about on this candle over here. We're taking the high price, which is the high, right, the high there. If we look over here on the chart, we can see there it gave us the high there when we're holding the mouse over the specific candle. We take the high and the low, right, where are we? The high and the low minus the low, and that gave us 55.31. The profit target equals us 3 times the stop, which is in 165.93. The stop equals the low, profit equals us with the high plus the profit. So you're going to take this high price over here, you're going to add that 165 onto it, and that is going to be where your take profit will be. Now, I have set the Fibonacci up that when I draw the Fibonacci's in, it will give me that automatically. Let's have a look at it, right? Let's just go and delete this one over here quickly. Righto, delete it out of the way. Yeah, we can see we've got a signal on the FTSE to go long. So what I will do is I'll go and collect my Fibonacci's. I take it from the top to the bottom. And as you can see, let me just make this a little bit smaller. There's my 3 risk, my stop loss, your entry, 161, 261 levels. Now to modify this Fibonacci's to give you these levels, all you do is double click on the Fibonacci, click Fibonacci properties. You can go over here and you can add and delete as you wish. Now the 3 risk is actually 4 times this amount over here, right? Because that is the first 100, second 100 will be down here somewhere, 200 is somewhere over there, and 3 is over there somewhere, 400, whatever. I call it the 3 risk. You just type in a 4 there, like let's say you go and click on add. You've got add over here. Let's say I wanted to make it a 5, and I can say this will be, let's say, risk R4, right? 4 times risk, and click OK, click OK. And now if I'm going to make it smaller, you'll see there is my 4 risk over there, right? So that is basically how I do it. So now I know I put my stop just below the low, my entry just a little bit above that, and I'll read this value over here, 7509.52. So I'm going to put it just below that level over there, just a little bit below it. Be careful for round figures like 7510, because markets tend to bounce off those markets, those prices over there. So I put it just below it, just to make sure that if it is going to be a resistance level, that it will at least just go through it before it reaches the bounce off level. That is basically how I work out my risk-reward ratio. Very easy. The more you do it, the easier it will become. It's the same over here. You can see I drew my Fibonacci from there to there, and down there's my risk, my 3 risks figure. Because on this strategy, I use a 1-to-3 risk-reward ratio. Now, that is about the risk-reward ratio. Let's go and look, how do we calculate the amount to risk on each trade? Because there is a difference. I will show you at a later stage exactly what is the difference on each one. Right, so let's go and open up the calculation quickly. Right, here we've got it. Now, to calculate the lots for the risk, please remember this is on the FTSE. The FTSE works, or the indices work, completely different to the currencies, right? The risk-reward ratios, the pips, everything is a little bit different on currencies. Yeah, you can see you've got the account balance, let's say $1,000. I want to risk 3% of the account. Now on the FTSE, I know that 0.1 lots equals me with 20 cents per pip. Now this is on InstaForex. Many brokers on the indices you cannot trade 0.1 lots. This is one of the reasons why I stick it out by InstaForex, because I can trade this amount over here, which makes it possible to trade my strategies and to trade with a smaller account, all those types of things. Now the risk amount in dollar value, in monetary value, is $1,000 times the 3%, because like I mentioned earlier, or the little guy on the stage told you just now, by the way, is a great little guy that he helps me out a lot. 3%, if it's a small account, I'll go maybe even up to 5%. The bigger the account is, of course, the less I will make this amount over here, with about 2%. I won't go under 2% because then it becomes not worthwhile trading it. Anyhow, I'm going to trade, let's say 3% of the account on the given trade. So 1,000 times 3% equals us to $30. Now, I know my stop is 55 pips on this given trade, on this trade that we're looking at over here. We're looking at this trade here now, right? So I know the stop here is 55 pips. So let's go back, right? Now I know the stop is 55 pips. So the pip value for this trade is the $30, which is the 3% risk, divided by the 55 pips. And that equals us, unfortunately again, 55 cents per pip. Now I know 0.01 lots is 20 cents. So if I'm going to trade 0.3 lots, it'll give me roughly 60 cents per pip, which is a little bit higher than this here. If I go down to 0.02 lots, that is 20 cents times 2 gives me 40 cents. Now 40 cents is far under this. So I'm going to round it up and I will go for the 0.3 lots, right? This will give me a lot closer to what I require. Now this is a problem when you are trading on a small account and you cannot get your lots more accurately. If this was 10,000, I would have been able to trade 0.25 or 27 whatever lots over here, which would give me then a much more accurate entry for my getting my lots correctly. Now this is good enough for me because that is close enough to the lots required. A little bit over, but it's okay. Now I have worked out a spreadsheet and I've taken all the trades on the FTSE this year, and as I said, I have where's the spreadsheet? Over here, right? Yeah, we've got the spreadsheet, and I have taken all the trades on the FTSE so far this year, and I have calculated them out in 3 different methods. The brown method over here is set and forget. When the signal is there, you work out your 1 to 3 risk reward ratio, place the trade and forget about it. As you can see, you are still down $168, trading at a standard lot of 0.01 lots, right? This is all calculated at a 0.1 lot, all of these calculations. Anyhow, that is a set and forget. This one here is like I explained in the video. Let's go over again. Should the trade go, where's one? Let's just go back a little bit. Let's just scroll back a little bit. Switch that off there. Let's just scroll back. We find one quickly. Right, okay. No, that was not good enough. Yeah, like here for instance, right? We entered the trade. We had a close below the 161, so we put our stop on the break-even point. If we had a close below the 261, I would have, or near the 261, I'll bring my stop loss to the 161 and then I'll leave it to run for the 3 target. So that is the one way. Where are we? Okay, spreadsheet, right? This is the green over here now. So the green I have calculated by managing your trade. Every day when the FTSE, before the FTSE opens up, or as soon as the FTSE opens up, you're going to have a look. Do you have a close above the 161, or did you have a on it or close to it, very close to it? It's not really rocket science. And then I'll move my stop in. Now you can see there you lost 60, here 0. So you can see you have managed your trades a lot better over here. You can see you've had 1, 2, 3, 4 losses, 5, 6 losses. This year has really not been good. But you're only $90 down. on this one over here, to that system. This is also trading a standard O1 lot. Here, this blue over here is where I have calculated 3% of the account. Yeah, you can see I've got it again, account balance. The risk of 3% gives me $30. So my stop for this particular trade, where are we? This particular trade over here, the stop we worked out to be the 55 pips. So my lot value again is 20 cents per pip on the FTSE. The pip value for this particular trade is going to be 55 cents, which then gives me 0.3 because it's, the computer just rounds it up automatically. So that'll give me 0.3 to trade. I'll be trading at 0.3 lots per lot. Yeah. So I put in a trade size of 0.3. That is how this one here has been calculated out. And here you can see you are at $915. Here you're at $909. Here you're at $831. So we can see by far that it is really worthwhile to calculate your risk reward ratio every time over here, the amount you are risking. You see, when you are calculating and you're risking 3% on every single trade, you're working with a consistency, because if you lose, you lose 3%, and if you gain, you'll be gaining your 3 times risk, which is then 3% is 9% that you'll be gaining on your account. So it is really worth your while, because now you're working with a nice consistency. And if you lose, you lose 3%. That's if you hit your full stop, of course. Most of the trades, you can see we had managed to get into it, in and out of it early enough. And just comparing this one here where you traded with a standard lot, and this one here where you used a 3% of the account. Look at the difference, right? Now, this might only look very small to you because it's a very small account and we're trading with small amounts. It is only about, what, $6 difference between there and there. But if you were trading on a $10,000 account, this picture would have been very different, believe me. And also, of course, you would have been accumulating as you went along. So this picture here would have been very, very different, believe it. Yeah, you're just trading a standard lot. You're not accumulating, compounding, nothing. This way here, you seem to be compounding, and it works very well because you're working with consistency. You lose 3%, you gain 9%. So I must say it works out very, very nice. And this is the way to go when you are trading on that kind of strategy, right? The EAs, well, that's a complete different strategy. I don't use this at all. The EAs have got a different calculator, which all these things, I'll make a proper calculator to calculate this as well. And I'll put it up soon. I'll put it up on the website for download. So people can just go there and download it, and you can use it to calculate your risk reward ratios. With that said, I'm going to give you back to the small guy again, and he'll help us out to finish off the video. Thank you very much.
Well, that's it. Thanks for watching. If you have learned from it, please click on the subscribe button.